Good morning, traders. It is Monday, October the 7th. Taking a look at the charts here, you can see we've got the SP 500, and what we've been seeing here is some bouncing bottoms in oversold territory as the market comes down. We're waiting for some news to come out that is going to hopefully, once we get some type of conviction here, see a big rally. But the way things are dragging out, we're actually starting to lose the upward momentum that we had. This is starting to be very close to a trend, and the momentum actually going to roll to the downside. We're probably only a couple more, a day or two, a big sell-off away. It'll only take probably one or two down days for the market to actually start to roll over and actually have a very negative impact. Once that momentum runs out of speed to the upside, it'll pick up speed to the downside, and we could see a pretty drastic leg down. So we're getting close to a point here where the market needs to do something. The fact that we've got all this green shading here shows that we're bouncing into oversold territory, and we do see the market get bought back up. Now, typically, the market is having characteristics of an uptrend still. As an example, in a downtrend, you'll usually see the market happen to have it'll gap higher in the morning and it'll sell off. That gives the opportunity for the big money. They can run the money up in overnight trading. They can sell at the open at a premium and make money as the market falls. And it's the inverse for an uptrend, with the market still in an uptrend here. The market continues to gap down, and we see big money step in, buy it in the morning, and then in the afternoon price pulls back a little bit and we see big money stepping back into the close, accumulating. So there's quite a bit of accumulation going on here, but if this momentum rolls over and we start to see the upward buying, there's a buying bias right now. Once that stalls out and starts to head down, all this accumulation is going to turn into distribution. There's a lot of shares traded in here. They're going to get purged, flushed out of the system, and we're going to see a very drastic break to the downside. We could even break these previous lows and start something that's really ugly. So the next couple, this week I think is going to be a critical week for the equities market. We need to see something happen here on the upside for this trend to be saved. Now let's just take a look at the futures. You can see where we're trading this morning. Overseas, everything is trading lower. This morning we're trading lower also, about the same as the overseas market. You can see in the last two trading sessions, Friday we had a strong move up in the morning, a little bit of a pullback, another strong move up, and into the close we had another push, closing up near the highs of the day. Very strong day in the market. It did put us into almost an overbought territory. It is very close to being a short-term extreme overbought. We were trading at a previous high. We had a strong move up. Momentum, everything was pretty much almost at the maxed out level, indicating that we'll probably see some type of pause or pullback. And more or less, that's exactly what we're seeing. We're coming right back down to the lower end of this range this morning. Overnight trading, we've seen prices move down sharply, having a little bit of a bounce here, negating a little bit of that move. But overall, we're trading down about 0.8% this morning. And this is what's been happening more and more. So in the last week and a half, we see prices run down in overnight trading, and then in the morning, we see big money step back in and buy it back up. So right now, we're at that point here where we need to see some money step in and buy it up, and we really need to see it break to the upside. Now, we do have a lot of resistance going back on this chart here. There's a pretty strong choppy price action of this grind lower. Once it starts to break to the upside, if we can get some upward momentum here and break above a previous pivot high, once we start to see that, there's a lot of people that are also short down in this area hoping for a major collapse. And once we start to have the momentum to the upside, we have got a lot of these minor pivot highs here that are going to trigger a lot of short covering, more or less, once the market starts to run. And you can see all these levels. Each time you break one of these levels, you're going to see a surge of buying, which is people getting long because we're starting to break new highs. It's also a lot of people that have been shorting from way back in here. Once it breaks their previous high that they got in on, or just after, then they'll be covering their shorts, and that adds buying pressure. Now you can see this huge blue volume section. This is heavy volume traded in here. And once we start to go up, all this volume here is going to have to start to cover their shorts and get long, and we're going to see a huge move to the upside. Now the inverse of that, if this market doesn't pick up speed to the upside and start breaking out, then we're going to see all this volume here. A good chunk of it is going to end up exiting the position, and we're going to see a huge wave to the downside. So that's kind of where we stand at this point. The market is pushing down to these extreme lows. It keeps tagging these oversold intraday levels and having strong pops on volume, but in overnight trading we just continue to see a bit of a selling bias, and prices get pulled back down to lows and new lows. So that's kind of where we are right now. Now taking a look at energies, let's just look at the crude oil chart. Crude oil last week had a little bit of a pop, traded sideways for a bit. It's trading down about 0.75% this morning. Overall, it was losing momentum to the downside. It had a strong move down here, and now it's starting to show some chop and a little bit of unstableness, and we've got a little bit of a pop. It's got a clear resistance level right around this 104. Overall, it could be trying to form a little bit of a base, but what we're looking for is we really do need a strong break below the 100 level. Here is going to act as a key support zone, but we do need a sharp break below it and some type of bearish pattern. Now, if we do happen to see a bearish pattern or a rising wedge form into here, and we see a nice rising wedge up into resistance, we're going to see resistance through the key heart of this around the 106, 107 area. We do have some down trend lines that are going to come down into this level also. Could be a great shorting opportunity, but it still has to get up there, and we really want to see that happen on relatively light volume. So that's where I think we're still a few days away from a play in crude oil. Taking a look at natural gas, here's the 60-minute chart of natural gas. Overall pattern isn't really all that exciting. It could be forming a bunch of different things. There's a possible head and shoulders pattern here. Unfortunately, I'm not a fan of a downward sloping neckline. It's got a lot of room to go. That's about a measured move. If you just measure from here to this consolidation, next measured move will be to the neckline. If it does pierce that neckline, it'll already have made its measured move. It'll be oversold, and a break of that neckline likely wouldn't do a whole lot more to the downside. If anything, we would see some type of bounce, which is why I'm not a fan of a downward sloping neckline. And we're just going to avoid natural gas just for now. Looking at precious metals, here is the 4-hour chart of gold. Gold's continuing to chop around. Big move down there last week. We've got a pop back up. We're kind of just consolidating here. Overall, the trend remains down. The longer we trade sideways, another day or two here, we'll be right at trendline resistance. We could easily see it make another push down. Looking at silver, here's the 4-hour chart of silver. A little bit different looking chart, but still similar. We've got a pretty clear kind of level of resistance and consolidation through here. We have the occasional blip to the upside, blip to the downside. Not much of a not much pattern here other than just sideways consolidation. You could say it's possibly, if it can break above these little pivot highs here, we might see another run up to this previous high, but overall the pattern is still trending down. And you can see here another day or two we'll be running into trendline resistance, and we could easily see it have another move to the downside. Now if we take a look at gold miners, this is the GDX 4-hour chart. It's starting to look pretty oversold. It's in a downtrend, so I'm not looking to buy it. If it can form this basing pattern we've been talking about for a while here, where it's trying to form this more or less stage 1 or basing pattern where it's kind of consolidating down here, and eventually once it can break above that, that will be a major bullish sign to the upside. On a short-term basis, it looks as though I think miners are starting to get a little bit oversold. They've just been grinding and grinding lower and lower. Key support is going to be down here around the 23. Eventually we're probably going to see a sharp pop. It's kind of how gold miners go. You see them drag down, and then eventually they have something happens. We see some sharp pop in them, and they can have a strong move to the upside. But overall, it is just ping-ponging around in this big range. Once it breaks above this range, it'll be a pretty major bull sign for miners with huge potential upside. I know it's a huge range already. If it does come down to the lower end of this range, there's a possibility you can take a stab at a bottom, but you got to remember that once when you're in a downtrend, these bottoms, sometimes you get a little break below them and you get a nice strong pop, but other times you get a break and you just see prices collapse and sell off to make very sharp moves to the downside. And picking a bottom is not really the best play here. It's better to buy pullbacks within an uptrend than try and pick a bottom, because in a downtrend, as a bottom is never really put in until you're actually reversed to the uptrend, which means we have to break this level up here. Now, taking a look at bonds this morning, we're seeing them trade up about 0.25%. We do have some short-term key resistance right across this level here. Got this mini little cup and handle pattern that has been forming. You can say it's just consolidating here with a bull flag. It has gone up and pierced to put a new high, had some strong selling. Another pierce, push a couple ticks to a new high again, strong selling. So there's some pretty good distribution selling up there. We got a lot of resistance. We've got some key pivot lows and consolidations through this level, which is why it gets up there and we're seeing selling pressure. But overall, if it can break this pattern to the upside, there is a potential that it could have a strong move higher and test up near these previous highs over here, or even go beyond. A simple measured move, we were to just draw this in, you've got this low, you've got this level here, so you've got this run, you move that to the upside, you can see a pretty significant move way up here. So that's kind of where it stands, and we may take a stab at it and put a really tight stop in under this previous low. And if it reverses to the downside, we get taken out. But if it does pop to the upside, there's a good risk-reward ratio that it would pay fairly well if we do get this move up here. And this would be almost a little bit of insurance on the SP 500 trade. If the SP 500 breaks down, we're going to end up seeing bonds here take a strong run to the upside as fear piles into bonds. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.